streaming, so we will start this process and we're gonna go live in just 1 second. There we go. Start this process and we're gonna go live in just. Love the echo. All right, I'm just gonna confirm that we are live. Nicole, if you can double check on your account as well.
All right. Looks good.
All right, well, I'm going to let Nicole take this away. Nicole is the finance operations numbers gal and get it done gal. So I'm really excited for today. And this is a different version of how did she do it. It's how did he do it and how does he do it. We have brought in our tax expert, Jesse, and we're super excited for him to be here. So I'm going to hand it off to Nicole. And make sure to post any questions that you have along the way down below so we can make sure that we're supporting you. Taxes are kind of a scary thing, and Jesse's going to make it really simple and easy. That's what we love about him. So Nicole, take it away.
All right. Thanks, Lindsay. So welcome to our usual Thursday morning training, and we are so excited to have Jesse here because he has really streamlined taxes for us as a corporation under Get It Done Gals, and also has helped me with a few personal issues. As you guys saw in a lot of the texts that we wrote, really pushing out this training, is that Jesse actually saved me $9,500 2 years ago. I was just transferring back over to the U.S. from living in Auckland, New Zealand, and I came home to a big fat IRS bill. And I am very strict about my taxes. I always file on time. I go by the books. And so I was shocked to receive a $10,000 bill. And I immediately reached out to my CPA and to Jesse because I have built my team of experts as an entrepreneur. I want to make sure that I have experts around me, making sure that I dot all the I's and cross all the T's. So Jesse Lipscomb from Roadmap Tax came in and saved the day. He was my hero. So what had happened is my CPA had everything that he needed from me, and he filed the taxes. Yet when the IRS went through everything, they found that there was one form missing. And it was a form that was never mailed to me. It was a form that I had to go to my brokerage, and I had to pull it up through 15 different clicks. I had to get on the phone and I had to have them lead me through. I never would have found that document without Jesse's help. So that's why it's so important to have experts in your corner. And once Jesse helped me figure out what problem was and where to find this form, I took it back to the CPA. He refiled, and I ended up paying $500 instead of the $10,000. So Jesse came in, white knight, saved me $9,500. So I can't wait to introduce you guys to Jesse and really look at taxes and small business finance and help you guys out so that you don't feel frazzled or overwhelmed or like you just want to avoid it. Taxes don't have to be overwhelming and complicated. They can be very simple, very streamlined, and that way you don't find surprise bills in the mail. Okay, so let's jump over to meeting Jesse. And we're having a little bit of video difficulty. So we have a handsome picture of Jesse and all of his information here. And he's actually going to be sharing the screen as he goes through the training today. He's going to be showing you hands-on some of his information and tips that he has, and then I'll also be guiding along, asking questions pertaining to you guys as our audience as small business entrepreneurs. All right, take it away, Jesse.
Very cool. Well, thanks so much for having me on the line today, Nicole and Lindsay. What do you want to talk about?
Let's dive right in. Okay. So my first question is, as an entrepreneur, when should you look into actually setting up a legal entity? A lot of our clients always want to know, should they set up an S corp or an LLC or continue on as a solopreneur? And I immediately tell them they've got to talk to you and introduce you guys. So what would you say to someone who's at that point of saying, okay, I'm making some consistent money, when should I actually make this legit?
That's a great question, and it's something that bedevils many a business owner. The easiest way I can explain that is actually going right to the IRS. Can you see the 1040 on the screen?
Yes.
Mm-hmm.
This is just page one, page one, page two of the 1040. There are certain lines that you have to know, and here, watch. We're gonna screenshot this and then just put it in paint. Okay, so you've got line number 7. What is that? That's wages, like you're working for somebody else, right? And then you've got line 12, where your income will be if you're self-employed. So let's say you just started off in business, and the first year in business, your total sales are $30,000, but you've got $20,000 of write-offs, $10,000 of profit would go there in line 12. Does that make sense?
Mm-hmm.
Yes.
And then, should you get to a point where you incorporate, your corporate profit will be there in line 17. Okay? So that line 7, line 12, line 17, add them up, line 22, that's your combined income. I believe that somewhere between $40,000 and $60,000 of net profit is where people really should start looking at going from being self-employed to incorporating. And the reason why is what you can't see here. On page 2 of the 1040, see line 57. Line 57 is where self-employment tax is. And what self-employment tax is, it's 15.3% of your profit. So, in other words, if here on line 12, you made, say, $60,000, right? So you made $100,000 before expenses, and then you wrote off $40,000 of legitimate expenses. You would have $60,000 right there on line 12. Okay? Well, that $60,000 on line 12 translates to $8,500 of self-employment tax. Okay? And that self-employment tax is due regardless or in addition to any regular taxable income that you would have. So the page 2 of your return, you got your taxable income. Maybe to make this easy, I'll put numbers in it. So if you had $60,000 of self-employment tax, of self-employed earnings, that's $60,000. Let's say for argument's sake that you don't have a mortgage yet, and or let's say you do. Let's say you've got $10,000 of itemized deductions, and you've got just yourself to worry about there. So your taxable income, $46,000. Okay. Well, whatever the taxes are on that $46,000, in addition to that, you're going to have the $8,500 of self-employment tax. So add it up, it goes pretty quick. If instead of having $60,000 of self-employed earnings, you had, say, $24,000 of salary and $36,000 of corporate profit, it's the same $60,000 that you had. However, instead of paying, $60,000, $8,477 of self-employment tax, you're only going to pay payroll taxes on the 24,000, you see they're $3,600 instead of 8,500. And I know I'm going fast with the math, but in this scenario, incorporating could save you about $5,000 by reducing your self-employment taxes. So that's really what I want to communicate is if you start being profitable, if you start making 40, 50, 60 grand a year, it may be time to consider getting a corporation from a tax standpoint where we can put some of your income on salary and put the rest in as corporate profit, and that will help you significantly lower the taxes that you are paying. Now, Nicole and Lindsay, I have one huge asterisk here. Self-employment tax, what is it? It's Social Security and Medicare taxes. So if we help somebody incorporate and lower the amount that they're paying towards their own Social Security, what is that going to do? That's going to lower the income they get in retirement from Social Security. So I don't want to help you save taxes today and hurt you tomorrow. What I really encourage everybody to do, if they're going to use the S-Corp strategy, take that money that you're saving, in our example, it was about $5,000, and take that $5,000 and put it in your own 401k or your IRA or your Roth IRA, whatever it is, so that you can start saving those taxes and saving for your retirement. If you just did that for 10 years, 50,000 or 5,000 times 10 years, that's 50 grand. In 20 years, that's an extra $100,000 that you didn't pay in taxes that you literally kept for yourself. Okay?
Fantastic. I love that huge asterisk. That's why I love getting your take on everything when it comes to the finance, to the numbers, because there is no way that any of us would think of that. So, my next question is, should you ever do your own taxes if you're an entrepreneur? Do you suggest using the online, like TurboTax or something like that? Or do you suggest hiring it out? At what point in business should you start getting the experts to come in and helping you with your tax returns?
I'm going to answer this question in a little different way than otherwise. Of course, you need to get a professional's opinion, right? But what's more important, what is far, far more important than whether you prepare your own taxes or you have somebody else do it for you, the most important thing you can do as a self-employed person is track your income and your expenses. I hate to say it, I see people transition from being employees to kind of self-employed every day. And what I mean by kind of self-employed is a lot of times people just treat this new opportunity like a hobby, or they treat it like part-time work, or they get so involved with it because they're so excited that they just don't have any idea of where the income's coming from and where the expenses are going. And so they feel, wow, I've got a lot of activity, I've got a lot of things going on, but at the end of the day, they might not be making any money. And so the key, the critical thing, anybody that wants to be self-employed should do is take a look at whether it's QuickBooks online. I like that because you can share it with your tax person and they can kind of oversee it. That's that function is free, but there's other services like Wave and Xero where they're just bookkeeping services, but it helps you manage your cash flow, right? You need to know how to track your income and track your expenses, and if you just did that, you'll be way, way, way ahead of the game. Plus, it helps you then talk to your tax professional on a totally different level. Okay, absolutely zero of my clients come in with boxes of receipts. It's never happened, and not that it never would, but it would never happen. And the reason why, I would just laugh. I was like, come on, I'm not going through a box of receipts. But what I will do is I'll help somebody take their downloads from their credit cards or their bank, and we can quickly use Excel to create a profit and loss for them. But tracking your income and your expenses, it really is so easy with today's technology, and it'll really make a big difference in how you view your business.
All right. So having said that, do you suggest having a separate bank account and credit card or debit card or something, and keeping, I always encourage all of our clients to keep it separate, keep it out of your personal bank account. Do you have to set up a specific business bank account, or can you just open up like a separate personal account and just make sure that all the money's going in there? Let's say up to that point where you're actually making that 40 to 60,000, where you're just kind of getting going in the business.
Great question. So, as you're just starting out, if you want a dedicated checking account, whether it's a personal account, back step. When you go to the bank and you open up a checking account, you can open up your own. You can open up 10 different checking accounts personally, and it's very easy. When you go to open up a business checking account, even if you're just self-employed, they're going to ask for, like a DBA filing or some kind of proof that you're self-employed. If you're just starting off and you don't have all of that, well then have them open up a new personal checking account and use that dedicated for business. As you get your sea legs and you're starting to really grow that business, you can get a new checking account specifically that is a business account. And certainly you'll want a corporate checking account set up when you incorporate. But I think it goes back to tracking income and expenses and good habits. So many of us are transitioning from being employees to being self-employed. And I mean, let's face it, when you work for somebody else and you get a paycheck, you spend it, right? I mean, that spend it, enjoy it, do whatever, save it, whatever. But when you're self-employed, that money comes in, and now all of a sudden you have to pay your business expenses. So you make $1,000. Well, forgetting about taxes, of that $1,000, maybe only $500 is yours because you've got $500 of advertising and utilities and office supplies that you have to pay just to net that $500.
So with the creating good habits, what do you suggest? So separate bank account, separate credit card if they're going to be using a credit card, looking at their cash flow, so either using QuickBooks, Wave, Xero, or even a simple Excel spreadsheet, just the income coming in, the expenses. I know that you have provided things that you can like write off as a small business. So, what is like the simplest way to start creating that good habit? What do you suggest when you talk to your clients?
A lot of my clients, I mean, many, in fact, the vast majority of my clients are self-employed. And we're having the same conversations that we're having today. We talk about, okay, well, let's open up a dedicated, checking, savings account, credit card, whatever. Put all of your income into that. Pay all of your expenses out of that. And as that's going, let's think about what's going to make sense as a business expense. This is a tax organizer for the self-employed that I put together. It's really easy. And the big boxes on the left are actually, they come from the Schedule C of the tax return, which is the self-employed schedule. But what's advertising? Well, it's anything you're doing to attract business, whether it's business cards or flyers, or I used to have a radio show, television advertising. That's getting crazy. But everybody has, whether it's SEO marketing or mailing lists or postcards or whatever, your cell phone, hey, you're self-employed, your cell phone's a business write-off. Okay, pretty interesting. Health insurance. Health insurance is tax deductible to somebody that's self-employed, so long as they're not losing money in their business.
Mm.
So you have to have positive net self-employed earnings, and if you have that, you can deduct the health insurance premiums up to the extent of your profit. A lot of people are going to start from home. They're going to work out of their house. There's an old way of doing the home office deduction where, you literally have to track, your cable bill and your SDG&E and all these different things, and then take a percentage of that. A new way, it's really easy. It's just $5 a square foot. So if you have 300 square feet dedicated as your home office times 5, that's a $1,500 write-off, clean and easy. Networking groups. These are things where I really believe the 3 things you have to do as a self-employed person is you have to prospect, market, and partner for success. So getting into trade associations, networking groups, getting exposure, trying to find centers of influence, those partnerships are really important. And then between prospecting and marketing, they're not the same thing. Marketing is something you do to get people to contact you. Prospecting is something you do to contact people. So in other words, in 2009 and 2010, when we had our radio show, we would have on average 10 people every Saturday call in. So we had the marketing of the radio show pushing out. People would call us. That was effective marketing. Once they called in, they became prospects, and so I would prospecting. I would call the people that have already shown an interest. So that it's kind of an interesting tie-in to taxes. Why? Well, before you write off expenses, you got to have some income, and if you can learn how to prospect, market, and partner for success, that'll help you have more income, and then you'll be able to write off some expenses off of that.
Perfect. So this, you guys, this link to this PDF will be in the comments below. I'll put it in there as soon as this training is over. And then, here's the next thing I would like to ask is, what is the biggest mistake you see entrepreneurs take with their finances or their taxes?
Well, I think doing it alone. And what I mean by that is, if you're not tracking your income and your expenses, and you're not planning your taxes, what ends up happening is, on April 14th at 11:59 at night, you're in a panic trying to get everything done to give your tax person on April 15th. And what ends up happening there is, regardless of the professionalism of the preparer, they're just banging it out, man. They're just data inputting, here you go, take it easy. Instead of talking to your tax guy or gal in like November. What do you mean? Well, end of year tax planning is so valuable. And you can only really do good tax planning if you have good records, a good understanding of your income and your expenses. So I really believe as business owners, if we can be a little bit more proactive and have a better relationship with our tax professional. I mean, Nicole, I always kind of feel like I'm cheating. Not really, but cheating in so much as I'm duly licensed as an enrolled agent of the IRS and as an investment advisor in California. And the reason that's important is because your tax guy is only supposed to give you tax advice, and your investment guy is only supposed to give you investment advice. Well, to me, tax planning is a combination of tax and investment advice. And so we're using the corporations, we're using 401ks or SEP IRAs, we're using these things throughout the year to lower people's taxes. And in fact, I just had an experience on Monday night. Before this client had incorporated, what we would do when we got together is we would say, okay, well, here's your income, and by the way, if you put this amount of money into your SEP IRA, it can lower your taxes. And they were always excited to write that check because they could see it right then and there. Wow, I saved $10,000, or wow, I've saved $5,000, whatever it was in taxes. Last year, once we incorporated them, we did planning throughout the year, and it was tremendous in the fact that we saved the family about $10,000 in self-employment tax and a little bit more than $10,000 in regular income taxes. And so, they saved $20,000 throughout the year. But when it came to tax time, we had already done everything. So it was more of a just, saying, hey, here's what you did, this is what you got, everything's good, the plan worked great. But it's almost like the capstone of having done a great year of communicating with their tax professional throughout the year.
I wholly agree. I always try to, as I said earlier in this training, is having your experts around you and building a team. If I came back from New Zealand and I had prepped myself or had never talked to you guys, I wouldn't have known that I would have just gone and written the check, right? Or done payments or whatever I needed to do to pay off that IRS invoice. But, having my team around me, I always reach out. I have my CPA that does my personal taxes, and I have you that you do the S Corps for both Lindsay and I's personal S Corps outside of Get It Done Gals and then Get It Done Gals. And, I always try to meet with both you and my CPA around like September, October. And I noticed this year you sent out some nice emails, I think like November, December time, like, hey, let's talk about end of the year planning. I love that you do that because I so agree with, like, tax time for me is not stressful. Our taxes are already filed, done. Like, S Corps are done, handled. And it makes life just a lot easier because I know that we're saving money. I know that we have money into the right retirement accounts and interest savings accounts and stuff like that, so that we're saving for retirement, and that the businesses are squeaky clean and just handled. And so I think it's so important just to schedule between September and December. I always like September because I like to look forward and say, okay, do we need to, here's what's going on with me and my businesses, but let's take a look at my husband's income too and make sure that the deduction or exemptions are correct. That way we're really set up strong for the end of the year, and then tax time comes and it's a breeze.
December 2016 was amazing in so much as the first 2 weeks of December, I was running 4 to 5 appointments a day with people that were doing end-of-year tax planning. And you put that in perspective, I really believe, I feel very blessed to have the great type of clientele that I do, because they're people that are serious about winning in their business. And when you're doing, tax planning at the end of the year, hey, what can I do to lower my taxes? When you lower your taxes, that's money really right back into your pocket, right? And so it's really, to me, encouraging to see so many people that are serious about the success of their business, about their personal finances, and doing what they need to do to win in the long run.
I love that. So for those, obviously for those who are listening that are in California, they can contact you for not only tax preparation, but any retirement and investment questions. But, for those outside of California, can you still help those with, I would assume, not the taxes, but you can help with legal entity setup and kind of talk about business strategy. Is that correct?
Well, kind of. I'm actually licensed by the IRS. So
Oh.
I, as an enrolled agent, I have clients all over the country.
Oh, interesting. That's really interesting.
At one point, if you remember one of your friends, I had people internationally.
Mm-hmm. Yeah, wonderful. Okay, well, that is great.
Nicole, we have a question that popped up, and I actually have a question while I pull up this question, if you don't mind. Jesse, so I would love to know, I feel like, Nicole is so prepared and super amazing on having all of this set up. I'd imagine there's a lot of people in this group that are like Nicole, and they're like super prepared. They've been planning. They have the money set aside. But I also know that we have clients that have said, "Oh, I didn't plan for taxes. I'm a little scared. I'm a little nervous." So what would you say to those people that maybe they're like kind of scared to go even reach out to you or, start this process? Maybe they're hoping that they can just avoid it, or just any really, obviously you have to pay your taxes. So what would you kind of say to that person, like in the means of how can you support them? Like you're saying, like potentially there could be areas where there's a lot less taxes that they have to pay, et cetera. What would you just kind of say to that person that maybe just hasn't been as prepared?
I have I'll share this story. I have a client, she's actually a very successful business professional, but whatever, there's something that's going on with her that she just has a blockage when it comes to bookkeeping. She just doesn't want to do it. She doesn't want to outsource it. I don't know. There's just a blockage there. And the last time we got together, I said, listen, let's take this stress away. I'm not a bookkeeper in so much as I don't have people, on monthly bookkeeping contracts or anything. But I said, well, when we get together to do some tax planning, just send me over the downloads from your accounts, the Excel spreadsheets, and we'll do that together. I can knock that out in 10 minutes. It's easy. And so I guess the advice that I'm saying is that if you feel like you don't have good records, that's okay. Most people buy everything with their debit card or their credit card. And so, we can get together and we can take a look at what those incomes and expenses are and really take it from there. I guess I pride myself in taking a lot of the stress away from the, whole things with taxes. I think you as a business professional need to focus on what you do best, right? And your job, prospecting, marketing, partnering for success, whatever product or service you're selling, if you get really good at that and you bring in good people, we can help alleviate a lot of the stress. Nicole, is that good?
That's perfect.
Yeah.
Yeah. I wanted to speak to those people that might not be as prepared out there, because I think that this is a topic where people hide because they are scared. And we've had a lot of clients that have said, oh man, I'm getting to that point, I'm a little scared, even though, Nicole's always so great about talking to them about saving and stuff like that for that. So I think it's perfect. I can attest to the fact of working with you, Jesse. Last year, my husband and I, you made it simple. You broke things down for us really cut and dry, and it felt not overwhelming at all. So I know that anyone out there that's, seeking out that style of support, or they're thinking, oh no, I have 2 months to figure out my taxes. It's a great opportunity to be with someone that is going to really support you in the process and make it really simple. So
I'll tell you, Lindsay, this much. Here's a sign that you need to fire your tax person.
I want to hear this.
If you ever feel like they're going to beat up on you for what you're doing.
Yeah.
That's not our job. My job, if you are doing your own books and you characterize your cell phone as an advertising expense instead of a utility, you know what? God bless you. It's still an expense, right? It's not for me to say, oh God, I can't believe you did that. Why? Who cares? Let's keep the important things important. Your tax professional's job is to take away the stress of taxes. And if they're not on your side, find somebody that is.
I love that. It's a guilt-free zone. No judgment.
Amen. Like, that is so funny. I sent an email 2 weeks ago. I sent an email just like that. She wrote me like a 3-paragraph essay and email. Explain, well, I did this and I did this and I did this and I did this and this. Oh, please don't judge me. Da 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 da. And I'm like, you know what? This is a guilt-free zone. You're okay.
Oh my gosh, I love it. Thank you, Jesse. Nicole, do you want me to ask Lauren's question, or did you see that?
Yes, I didn't see it. Please ask.
Okay, Jesse, we have a question from Lauren. She said, you mentioned QuickBooks Online, but do you recommend that over the software version that you download onto your computer? Is it secure online?
Yes. That was it.
Yeah.
Yes, I
Yes.
do. So it is secure. I mean, it's just as secure as you logging into your Chase account online. And the reason I say that is you literally have to log into your bank account to integrate your bank account to the QuickBooks Online software, right? So in today's world, I mean, there are data breaches every day, right? Nothing is a perfect technology, but the same technology you're putting on your desktop and matching your bank accounts, that's the same technology that's being used at QuickBooks Online. It's just so much easier to use. Plus, you have the ability to share it with your accountant, bookkeeper, or tax person. I really love it. And just as an aside, I've been personally audited twice in my life. Once by a CPA firm. I was self-employed, buying a house, mortgage company needed audited CPA financials. Okay, great. So at that point in my life, everything was done in Excel. I gave them my Excel profit and loss, and I gave them my bank statements, everything came back perfect. Okay, couple years ago, the IRS audited one of my companies. I was really excited because it was one of my companies that does make a lot of money, so it was like the perfect one to audit. But that one came back perfect, and both of those were done in Excel. Since that time, now I'm in QuickBooks Online. My goodness, it is so easy, and I love every couple days or so, updating it, checking the transactions, and seeing where I am. You can look at your year to date, your month over month, and it'll give you a really powerful means in which to evaluate the health of your business, instead of having to put together a profit and loss yourself in Excel, which, regardless of whether it came back, right or wrong, it took a lot of time to put together. And it's, like I'm saying, QuickBooks is easy.
I would imagine that TurboTax, Intuit goes through, Intuit has QuickBooks, right?
Yeah.
Yes. They go through extreme measures in making sure that everything is safe, because they do deal with the IRS through the TurboTax as well. So I'm sure that, they have to have everything locked down as much as possible. As you said, no, there are hacks every day. But great question, Lauren. Lindsay, do we have more questions?
I don't see anything right now, but I also know that Lauren says, awesome, thanks. I also know a lot of people will be watching the replay and probably ask questions there. That seems to have happened the past few weeks. So
Okay.
we can pop in, and if there's something that we can send over to Jesse to answer.
Okay. So, Jesse, you had provided tax planning for the self-employed, the tax organizer for the self-employed, and starting or buying a business. Would you like to share the PDF, like how they can go through the tax planning or the starting or buying a business?
Yeah, so again, here's the tax organizer for the self-employed. I literally just built this myself because most people, when they get tax organizers from their tax people, it's like 20 pages long, man. How are you going to use that? This is just like an idea generator for people that are starting out. Tax planning for the self-employed. This is a nice and easy report. It talks about, the first thing I talk about is self-employment tax, right? That is a lot of times one of the biggest taxes people end up paying. Estimated tax payments, employing family members. That's kind of cool, right? You have your teenage kid helping out in the office. You can pay them $4,000 or $5,000 a year, get a tax deduction for yourself, and not even be taxable to them. That's kind of.
I'm glad you pointed that out because I was just talking to someone about that, so I'm excited to read more about that. Not that I have like a teenager at home, but I think it's interesting to understand. So that's cool. Thanks, Jesse.
Yeah, and so the easy math is this: $6,300 is what the standard deduction is, right? And if they're under 18, if they don't have to pay self-employment taxes, if you pay them $6,300, they file their own tax return. $6,300 of income minus $6,300 is a standard deduction, means no taxes. And if you're in the 25% tax bracket, 6,300 times 25%, you just save yourself $1,575 of real taxes plus almost $1,000 of self-employment tax. I mean, that's a $2,500 tax savings for having your kid help around the house or in the business.
Maybe there is a benefit to having a kid. Lots of benefits, of course.
All right. Establish an employer-sponsored retirement plan. Most people, for some reason, don't know this, but do you know if you're self-employed, you can have your own 401k? You don't have to even be incorporated. So long as you're self-employed and you've got profit, you can have your own 401k. The reason this is important is that if you use the S-Corp strategy and you save $5,000 of self-employment taxes, yeah, you can put it in an IRA. But what happens when you end up saving $10,000 or $15,000 in taxes by using the strategy? Where are you going to put that money? 401k, right? And that, all of a sudden, that gets to some big dollars pretty quick. Understanding business deductions, we'll jump back to that tax organizer for that. And then healthcare-related expenses, really specifically, as a self-employed person, you can deduct your health insurance. You also can deduct the cost of long-term care. You can deduct contributions to health savings accounts. You do all kinds of good things that way. And then moving on to the other report, starting or buying a business, pretty much the same thing. I mean, it talks about planning and then legal structure and taxation, reinforcing the idea of, hey, let's have some good record keeping. Insurance. Man, there are so many different types of insurance out there. But, insurance and staffing goes hand in hand. I don't know from a labor standpoint how it works in the rest of the country, but I do know this. In California, from an increasing minimum wage to family medical leave benefits and everything else, it's really, really expensive to have your own employees working for you when you first start off. I love the idea of staffing firms. You'll pay a little bit more, you'll pay a little bit of a premium, but for them to take care of all the payroll taxes and withholdings and all these different things, look at a staffing firm, especially if you just need admin support. Okay, and then again, marketing, advertising. You are your own rainmaker, and so figure out how people can contact you. I'll tell you a story. Financing. Obviously, if you get loans to finance your business, we can write off the interest. Sometimes you've got to spend some money to make some money, but the key word there is sometimes. I would be hesitant if I wasn't fully vested in a business with some real world experience. I'd be a little hesitant of just spending money for the sake of spending money. Let's make sure you understand how your business is going to function first. Patents, trademarks, and copyrights. So, Roadmap Tax is a trademark of Roadmap Tax Services, Inc. Which is pretty cool. When I went to trademark the Realtor 401k, I got a big fat punch in the nose. And the reason that happened is that I should have thought of this and I didn't, but Realtor is not a common everyday word. It's a trademark of the National Association of Realtors. So if you're going to trademark something, you want to let's make sure that half of the name isn't already trademarked. Right. Oops. All right, so licenses, permits, and registration. So I've talked a little bit about incorporating. I'm not giving legal advice. I am giving tax planning advice. And I'm just going to give an opinion. Whether this is right or wrong, I don't know, but I'm pretty sure I'm right. If you are a licensed professional, specifically in California, you're a licensed real estate agent, you're a licensed insurance agent, you're a licensed whatever agent, two things. Number one, the state of California will not license LLCs professionally. It's not in the Business and Professions Code. They can't do it. However, they will license full-on regular C corporations or S corps. What am I talking about? I'm talking about getting, for example, a corporate broker's license in real estate. Okay, you can have your corporation licensed as a broker in California. Well, that's pretty cool. So you're a real estate agent, you become a broker, you get corporation license, everything's cool. You're operating with a corporation, and you do something bad to a client. If you get sued, who's getting sued? Your corporation is getting sued, and you personally are getting sued because you're acting in the capacity of a real estate agent, right? And so the whole idea that the corporation is going to give you this great limited liability, I just find that really, really hard to believe if you're a licensed professional. I think the corporation is giving you great tax benefits. But having said that, if you're always trying to do the right thing, you shouldn't have to worry about it. Right? Getting errors and emission insurance is probably a good idea, though. Buying an existing business, boy, that's sometimes a really tough decision. I really think that the best investment is something that you have some knowledge about. So if you've been doing taxes for a couple of years and then a buddy wants to sell you his tax business, you'll be able to go in there and evaluate the types of clients he has or she has and see if it makes financial sense for you to buy it. But if you don't have any experience in a business, man, make sure you get some people with experience on your side that can give you some advice. Just be very cautious that way. And same thing with the franchise. If you're going to try to reinvent the wheel at every turn, franchise isn't going to work for you. Far better you build the franchise yourself. So that's a lot of different insight. But I think at the end of the day, having passion for whatever you're doing and getting out there, getting after it, those are all good, positive things. And kind of coming back around, try to have good records. The better your records, the easier it is to plan. The less stress you'll have when it comes to taxes, and the more success you'll have when trying to grow that business.
Perfect. I love that. I love that it's a stress-free zone. Do your planning, have good records, it sounds like is the top 3 takeaways for today. Okay. So, Jesse, we can find you over at roadmaptax.com, correct?
Yes, ma'am.
All right. And so thank you so much for being here and sharing your expertise and how we can have good records and to have a strategy and a plan and save ourselves some time and money and not feel guilty or stressed out about this stuff. So you guys, Jesse Lipscomb, thank you so much for being here. Check him out at Roadmap Tax, and I will put the links below in the comments for the 3 PDFs that Jesse shared.
And also, Jesse, I believe and totally correct me if I'm wrong, but I think you have like a intro consult offer for people that want to like get some tax advisement. Is that right?
From the Get It Done gals, absolutely. Whether it's in person or on the phone, through this webcast today, I'll give you the first hour is free. Just we can sit down and do some tax planning here.
Oh, that's awesome.
Perfect. Thank you so much, Jesse. We appreciate it. We'll put that in the notes in the blog as well, so that everybody knows that they can contact you for legal entity and tax advice and strategy.
Very cool. Nicole and Lindsay, thank you so very much. I really appreciate it.
Thank you, Jesse.
Thank you.